Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, January 29th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend going on 3 months now. You can check the trend gauge over here. We've got the coveted 4 green arrows depicting leadership acting very well. Great day today for leaders. They actually led the indexes higher. And then all five of the major indexes, we track them over 3 time frames, and all 5 are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Got a new acronym for you, something that we've been reading a lot about recently. QRA stands for Quarterly Refunding Announcement, and it's something that the Treasury does when they project how many bonds they're going to have to issue. It has a lot to do with what the balance is in the Treasury, what the tax flows are coming into the Treasury, what kind of bonds are expiring that they have to reissue to fund the government. But it really has to do with how many bonds they're going to have to issue over the quarter. And the number was reduced today, and that's seen as very bullish since we're running ridiculous budget deficits. But the reason for that is that tax inflows are running ahead of schedule. So $55 billion reduction in the Q1 QRA sparked a late rally. This announcement came at 3 o'clock today, and the market popped to the upside as yields dropped. In line with that, here are the final numbers. Big 7 up 1.16%. RG8 is our 8 growth ETF composite, doing just what you want it to do, up 1.94%, breaking out of pretty much all of them breaking out of a 6-day consolidation. S&P 500 opened flat, had been trending higher most of the day, really popped after that 3 o'clock announcement, up 0.76%, equal weighted up 0.6. NASDAQ 100 up 1%, equal weight also up 1%. Dow Jones Industrial Average up 0.6, mid caps 0.9, Russell 2000 small caps up 1.7, Global 60/40 stock and bond up 0.56. Contributions from both stocks and bonds there today. In-house GROTECTION, good day for the good guys, up 1.51%. Let's take a look at the charts. We'll start with the S&P 500. We'll go to a 5-minute chart, and you can see us just kind of meandering around in a tight range today. Broke above 4,900 after 2 o'clock, and then here's the big bar, the 3 o'clock 5-minute bar with the breakout on that announcement. A little bit of a pullback into the close, but the last 10 minutes back up near closing near the highs of the day, and that's what you want to see. Good stuff there. NASDAQ 100, similar setup, not above as it had been lagging over late last week on this negative reversal. This was just getting a little too far ahead of itself, up 7% at times above last Wednesday, up over 7%. Extended from the 50-day moving average, pulled back Thursday and Friday. Not quite at new highs, but a nice day today, up 1%. Dow Jones Industrial Average putting a little bit of room between it and that 38,000 level, closing at 38,333. Now mid caps, these have been consolidating in a range for 5 days, not quite broken out on the mid caps, still within the range, but at the top of the range. Note the 8-day exponential moving average has been holding pullbacks on this since the gap up on 122. Now, small caps IWM, there's the breakout. 8 and 21-day moving average holding the lows of this consolidation and making a higher high today on that after market rally. VIX was higher all day today, probably because of the FOMC this week. And you can see it ran into the declining 200-day moving average and closed at the lows of the day. So it came off as the indexes rallied, which is what you want to see. And it's also below the 15 level. We would prefer for it to be below 15 and also below the 50 and the 21-day moving averages, which it's above right now, but not holding the market back at this point. Dollar was strong all day, but came off and closed near the lows of the day. when that announcement, that QRA announcement came out. How did that impact gold and silver? Gold up 0.71%. That rallied as the dollar came off. Gold stocks up 1%, also rallied as the dollar came off. Bitcoin was strong all day today. Bitcoin and the Bitcoin complex. You can see it breaking back above the 21-day moving average after gapping up on Friday, following through to the upside, up 2.66%. Let's flip to bonds now. The broad bond index closed at the high of the day, meaning yields come off. Now, yields on these markets miss charts stop trading, I guess, in the bond pits at 3 o'clock. So this announcement came out at 3 o'clock, so that's not going to be reflected. But bonds higher, meaning yields lower. That goes for BND and TLT, the broad bond market. I'm not even going to show those other charts because it's going to be confusing. Equal weight, RSP, had been lagging for a while, broke above this tight range here, and not quite at a new all-time high, but this means the broad S&P is rallying as well. So not up anywhere near as much as the NASDAQ 100, or I'm sorry, the S&P 500 is year to date because of the weights on the heavier names, but that's still a pretty good chart. We'll take that. QQEW, equal weighted NASDAQ 100, up 1% today. Excuse me. Near highs from last week as well. So that's our inter-asset correlation. Here's the tail of the tape, and it's not 129.7, it's 129. So FOMC Wednesday, everybody looking ahead to that. It's like a foregone conclusion that they're not going to do any changes, but it's really going to be the tone, the statement, the press conference, and answers to the questions and outlook, that whether it's hawkish or dovish, that dictates the reaction. But there's the QRA news. U.S. cuts Q1 borrowing estimate from 815, but I mean, these are some huge numbers, man. 815 billion to 760 billion. We're celebrating the fact that we only have to borrow 760 billion over the first quarter. Sounds ridiculous, but it is what it is. You can think what you want about the deficit. The market keeps going higher. Up 7 out of the last 8 days, 8 days above the 80 MA, 16 above the 21-day EMA. 10 out of 11 spider sectors up today, led by software and banks and biotech. Biotech was down early and reversed to the upside. Dollar came off after 3 o'clock. Bond yields down, and XLE energy down. So in-house, with the strength, we sold SQQQ. That was before 3 o'clock. As just no follow through to the downside after last week's reversal and the fact that we got extended. So we sold that just for a loss of 0.01% of AUM, I believe. TMV, this was a hedge based on interest rates going up. We took that off when the TLT broke to the upside after that 3 o'clock announcement. So took a small loss on that. And we added to a firm as it showed strength all day. So this, taking off the hedges and raising our firm position, added 21 basis points to our Revere volatility adjusted beta version 2 calculation. So from 1.59 to 1.80. Bottom line on the day, Treasury QRA reduction sparks late rally as yields drop. Let's take a look at some charts. We'll start off with SMCI, which upped guidance a little over a week ago, had a big breakout on big volume. They reported even better after hours than when they upped their guidance, up 9.5% after hours, a true market leader in focus right there. While we're not happy about not participating in that, what they do is create servers for data centers, and those centers, those data. One of the let's step back here. 2 earnings reports ago, they dropped because NVIDIA could not give them enough chips to build the servers to put in the data centers. Well, that problem apparently has been solved, and when SMCI is up, usually you see NVIDIA up, and you are seeing NVIDIA at all-time highs after hours, trading at 632, and we've got a sizable about 6.5% size position in NVIDIA. So SMCI does well, NVIDIA does well, AMD up as well. We also have a position in that, and that is going to report after hours. Let's talk very quickly. Well, we'll talk about it tomorrow. We only have a 2.5% size position, so we ran the numbers, and anytime somebody reports, the way we handle earnings is we take a look at what the market maker move is on Thinkorswim. In this case, it's $15 for AMD. Convert that to a percent, take 2 times that to the downside. That's our worst case loss scenario. And we size so that we never lose more than 1% of the total portfolio if we would get a double move down. And we could have up to a 6% size in AMD and still be safe. So no reason to go through that exercise with AMD, but I'll explain the math tomorrow if you need, if anybody wants more info. I'll go over that tomorrow. So there's AMD. A lot of our leaders had a good day today. Let's show a couple of other ones. Crowd back at the 300 level. Outperformance, like I said, leaders were doing a fantastic job of leading today, even before the indexes. Here's Uber up 2.2%, Datadog up 4%. It appears to have gotten over its weakness, even though the volume isn't compelling, back to the upside. Snow making a nice move, not quite a higher high, but up 3.5%. And as I mentioned, we added to a firm back above the 21-day moving average after holding that 40 level and the 10-week moving average consistently. There's a bunch of other names that were up 4, 5, and 6%. It was a good day for leading stocks, and that's a bull market. And with that, I'll wrap it for Monday, January 29th. This is Don Vandenbord with Revere Asset. If you want to reach out, it can be reached via email, don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it's not how much you make in the market, it's how much of that you can keep. Let's look at a weekly chart of the S&P here. And this is the time when we're protecting portfolios, especially when we're under this black line, the 200-day moving average. This is the time when we grow portfolios because the market is going higher. This was another area where we went defensive, briefly poked back below the 200-day moving average. This was late last year, but then the follow-through day on November was the signal to us to get back in, and we've been riding this wave ever since. Appreciate it if you like and subscribe on YouTube. That helps get our content out into other people's streams that are interested in things that you're interested in. And with that, I will wrap it up for Monday, January 29th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.